The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have a little programming announcement. We're going to have John Jameson on at 9:30 this morning. And then we're also going to have tomorrow Mr. Richard Anderson of the Anderson Anderson Capital Management will be on talking to us about the supply demand in some of these markets and also the drought that's going on in Argentina. So we'll see what he has to tell us. But John Jameson, folks, if you're in these Bitcoins, he's going to scare the bejeebies off of you because some of the scams that are going on out there are just really amazing. He's going to talk to us about one of those scams today that just literally, I thought it was a great idea if you were a scammer, but boy, you talk about some unscrupulous people. Anyway, we're going to start the show like we usually do, looking at the DAX index. As you can see, we had a pretty good rally in the DAX, very similar to what we had over the last 4 days in the Dow Jones, the E-mini S&P, the E-mini NASDAQ, and also the Russell. The Russell and the Russell and the S&P 500 stopped exactly to the tick. I mean, the Russell to the exact tick. The S&P went above it by about 2 points to the exact 618. The Dow Jones went to the 618, and of course the NASDAQ, which has been the big daddy rabbit, went up to the 7-8% level, giving us a 4-day rally, off of the big drop that we had into early February. Now, where we go from here, remains to be seen. I think most of you realize that there was a big rally Sunday night, and Dow was up about 100. The S&P, I believe, was up about 15, and the NASDAQ was up about 40, I believe, and all that started to dissipate late Sunday, and then Monday on the holiday, they were still doing electronic trading, and that, started to show that there was some weakness coming in, and I believe it was probably due to what was happening, with the FTSE, because the FTSE has been, I'll put this up so we can take a look at it. You'll see it's been weaker these last few days. As we did get a rally in the DAX, but the FTSE, which is the UK market, actually was starting to sell off. So we'll see if that is going to be a problem or not. We'll just have to wait and see. I do have several segments that I wanted to cover today. I had so many questions about the opening price that I thought I would bring it up and just show you, like Twentyman says, defy human nature, do the work yourself. But I'm going to put this chart up here. This happens to be the euro, foreign exchange for the euro. And what I've done here is I have changed the usual candlesticks, which I like candlesticks, not because I understand them too much, but they can show dojis and tweezers, which are the ones that I really like the best. And it'll also, they're colorful, and you can count the bars quicker. And with this one, I had to switch over to a regular bar chart so that we could show the opening price very easily. Going back to the left side over there, the opening price is defined by the opening is in the first 25% of the day's range. We got that original idea from Earl Haddady and Jim Sibbett. They wrote the first book on the opening price back in the 60s, I believe. It was about commodities. They had a service, I cannot remember the name of it, but it was in Pasadena, and it was right next to the Office of Market Research, who was my mentor, Dave Nelson. And then in 1980, I was trading on the floor. I hadn't started trading on the floor of the S&P pit yet, and I was going to visit John Hill as often as I could in Hendersonville, North Carolina, and John's son, his oldest son, John Jr., was going to school at Duke, and he was studying computer science. And we were talking about this opening price phenomenon, and so we had John Jr. run all kinds of studies on commodities that the data we had got from the Merck, and we had found out that there was a great deal of similarity between what they had found and what we were looking at. And what happened was John Jr., after he got out of school, he got involved with Toby Crable, who wrote the book, The Opening Price, I think, that sells for about $1,200 on the internet, and I think you could save your money on that one. But it basically shows this. Now, if you'll watch this, I want you to do the work yourself, because unless you do it, you know, I can tell you anything you want, but until you prove it to yourself, it don't mean diddly squat. But if you'll see the first one there on the far left, that little red box, that shows you the opening, right near the opening, and it rallies. Now, I didn't do the rest of those. I waited until Christmas, and that's where I started to look. You'll notice the day after Christmas, it opens on the low and rallies, 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 opens on the high and rallies, opens on the low and rallies, opens on the high and rallies. Folks, that's 7 days in a row where it acted that way. Now, the next day it didn't. Then it went right back to opening on the high, opening on the low, opening on the low, opening on the low, opening on the low. The next one is really close. The next one doesn't work. The next one, open on the low. The next one, really, really close. Open on the low. This one didn't work at all. Open on the low. Next one didn't work. Open on the low. Open on the high. Start looking at these, folks. You're looking at something that works about 70% of the time. What you've got to be able to do is to try to how you put this into your trading strategy. Now, I'm working with a couple of people trying to get it automated so that we can watch about 6 major cross rates when they start in London, and that's what we use for the opening price, because that's the big headquarters, you know, for foreign exchange. But the easiest way to use this, and that is if you are long a stock or a commodity or a foreign exchange cross rate, and you are long that particular instrument, and you are below the opening price, the odds of you winning on that trades are less than 2 out of 3. So you've got the odds very heavily stacked against you. But on the same token, if you're short something and you're below the opening price, the odds are 2 out of 3 in your favor. So watch that. The simplest way to use it, I mean, if you want to just black bag it, if you want to say that, but if you want a simple way to use the darn thing, is if you're confused about where you should be, just ask that question: am I above the opening price? And if you're not long, and it's not above the opening, get out. That's telling you that. If you're short and it's above the opening price, the odds of you are against you. It's just probabilities. Prove this to yourself. Pick out the euro or the pound or the Japanese yen, or pick Apple. Apple works great. Largest, that's the most active stock in the world. Look at that one. That puppy works a lot of the time. It's really a really great thing. John and I wrote a book about this, the Opening Price Principle book from, oh my God, it's 20-some years ago, but it describes some of these things. And but anyway, that's what we're looking at here with the opening price. So use that as a tool. It'll help you. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, let's take a quick look here at the gold market because we had a chance here for gold, to rally here over the last few weeks, and it's really started to give up the ghost, rather badly. And so all I have to do now is to find the doggone chart. There you go again. Let's just look up here. Here we go. There we go. I just wanted to show you, this is from last night, and we've already hit this level and then bounced up. We'll be watching here to see here. There we go. You'll notice here that gold over the past, since the 14th, the past 6 trading days, we've made an ABCD here perfectly last night down at the 1338 level. We rallied to 1342, and now we're starting to roll over. We've seen several instances of the potential weakness in the gold, and it's been sort of, raising its head quite a bit. And if we remember from last week when we made that run up right near, in fact, it was on Friday. If we'll get this up here and take a quick look at it, you'll notice that we made a potential 3 drive to a top pattern. There was a double top there, of course, at the 1365 level. We didn't make a new high. We almost matched it within a half a dollar. And now we're trading down below the 1340 level, which is not a good sign. So this is telling us that this gold is certainly suspect right here. If you'll notice the old highs that we made back here at the 1300 level, that would be the area where I think you'd come in, to look at some support. But take a look at the silver chart, folks. I mean, that's the one that's really telling you that these metals are not running on the same racetrack. I mean, the silver looks, it just looks horrible. I mean, it really does. If you look at the relationship here between the gold and the silver, you're going to see, a really interesting spot here. That silver should come down here, which is around the 1645 level. Now that's a real key thing, to look at. Now we went right down to that 61% retracement in the gold, and just in the last 15 minutes, we rallied about $7. So that might be a very good bottom. the actual low that came in here, we went down to 1337.80. The buy was at 1339, and it's bounced quite a bit. It's up to 1344.5 now. So that might be able to hold it. The other one that looks real interesting here from an overnight standpoint is the euro, and I wanted to bring this up here because many of these, are running together, and we want to get this up here to see where we are. Hold on a second. I've got to find the euro. Boy, I do so many of these for you folks. I can't get them all. Let's take a quick look here at the euro. The euro went right down to this 1330 level, all coming together. You'll notice that we broke that low at 123.60 Sunday night. That was Monday night. That told us that we were probably going to go down to this level because that was where the 78% level of February 14th was setting, and it was also the 61% retracement that came in from February the 10th. So they had two numbers coming in there. You also had a 3 drive to a bottom pattern at that point. So that was saying that this ought to be some pretty good spots, to take a look at these. So whether this is going to be the case or not, at least it's done what it's supposed to do so far, and it gives a little bit of a bounce, from this level. That's a real interesting thing to watch. If you'll remember last week, we talked about the fact of where we were in the Japanese yen. We wanted to talk a little bit about that because the Japanese yen had a pretty big break. We actually broke below the $106 yen on Friday, and all of a sudden, we've rallied more than 160 pips just during that time. We're trading up about 107 and change right now. So that's telling us the importance of that bottom that happened Friday. And remember, that was the 1 day off of the solar eclipse and new moon. So I think cycle-wise, that ought to be something that we should be pay very, very close attention to, because it's a spot that is just technically is just absolutely very, very important. We see that in the dollar index by just looking at this. We'll just look at this again here. I wanted to show you the same thing that happened in the dollar index here. You'll notice we snapped below that old lows from January 23rd, and what happened? We came right back off here again. We were looking at the 16th, which was the solar eclipse and new moon, and we had a pretty good rally, and it's continued so far this morning. And whether it will continue or not, I don't know. But the fact that it bounced off of that really key level really means a lot, folks. And if you'll just remember the dollar on the long-term weekly chart, the importance of where we are with that chart, because you'll see that it's setting right at that 61% retracement from 2014. That's spot on at that 88 level. And we went down below it by just a couple of pips and then rallied 100 and some pips. So that's saying that it's extremely important, and that's what's happened, at least so far, from a technical basis today. That is it's really big, folks, because that affects the dollar. The strength of the dollar affects what imports and exports are going to be doing, because if our dollar is weak, imports will be increasing. People can buy stuff on sale over here. And that is, good for people that want to sell. But if they have to sell it at a discount price, that's not so good. So this dollar index at that level is extremely important at that 61% retracement of that level. And if you remember, we talked about the cycles that were there, and they all led to that same area of that solar eclipse and new moon that happened on the 15th of February, the day before the Chinese Year of the Dog. So we want to be watching that and just see what's out, see what's going on right now. Anyway, someone asked a question about the gold, the Fibonacci level, the 61% level that I posted in there came in at 1339. And the low was 1337.8. We've rallied a little bit from that area, but that's a very, very important spot, to be watching. We need to watch this spot that we had also in the S&P last night, because here again, we had the same situation where the market went up and stopped right at the 61% retracement of those previous days' ranges. And that was saying that you have to watch it very closely because it was right over that solar eclipse and new moon, and that is another one that makes it very, very important. So we had a lot of things happening. In fact, if you're looking at the Treasury bonds, we had the same thing happen in Treasury bonds. They pulled down and made a 78.6 retracement of the last low, spot on, rallied almost one full handle off that spot. So these numbers they're telling us that something really big is most probably happening in the mix. That's what we think. So we'll keep a close eye on it. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with our friend from the UK, John Jameson, about some really incredible scams that are going on in the cryptocurrency area. John, how are you?
Good morning, Larry. I'm very well. How are you?
Yeah, very good. John and I were speaking yesterday, and he was telling us, John, tell him about what Ledger is and what happened with this gentleman that lost all of his Bitcoins. Explain to the folks what's happening, because this cryptocurrency is new to a lot of us. But give us a quick summary of what went on.
Sure. Okay. Well, somebody had bought a hardware wallet, which what the two main leading brands, and of the two, one of them is called Ledger, and this guy ended up buying what he thought was a new one from eBay. And basically what happened was that when he unboxed it, it looked, these things come in a, it's a bit, if any of your listeners own Apple products, it's a little bit like unboxing an Apple product. They're professionally packaged, they feel good, they look good. And this guy, opened his, apparently it looked great, fantastic. And inside it, he found a scratch card, which again looked professional, and it matched exactly, the kind of card that was used with the official version. And basically, the guy was given instructions to just get a coin and scratch off the numbers, where he was given his 24-word seed for his wallet, and which of course he did, and he set it up, and he basically got scammed and lost the lot. So what had happened to him was that somebody had already bought that. They'd obviously been very careful opening it. They'd set it up with their seed words. They'd professionally got it repackaged so that they had an official-looking scratch card inside it. And to catch the unwary, this poor guy lost everything. So much so that actually when he complained, he was so beside himself that I believe the CEO of Ledger are helping them with the police to get, to try and get his funds back. But yeah, Larry, that's the kind of thing that's going on at the moment.
Wow, that's really scary. And that's just probably one of many scams that are probably going on out there, because there's not really any police force that is watching it, correct?
Yeah, I mean, you've got to be careful with this stuff. One mistake, one fat finger mistake, and you could lose, whatever transaction you're going through right now. If you put the wrong address in, you couldn't paste the wrong address. Some coins have little quirks like Neo. You can't send a fraction of a Neo, so if you actually put in a fraction, that would cause you a problem. And all of these little things, they're all there, and it's just, you have to know. It's actually straightforward, like anything else, to move it around, but it's like anything that's new, until you've done it a few times, it's a little bit nerve-wracking, because it's new technology, and you're not used to doing it. And most people today are used to a second chance, a 14-day money-back guarantee, and there isn't one of those in cryptocurrency, sadly.
Yeah.
That's why we can buy them for. That's why we can buy them for a few cents, right?
Yeah. John, we have a question from one of our listeners this morning, and that is there any particular time frame that you're looking at where this might start getting more into the mainframe, this whole thing about blockchains? Is it 1 year, 2 years, 5 years? I mean, do you have a rough idea of what it could be, or is it just evolving so fast no one really knows?
Well, you can just tell by the money that's moving into it, the backers of, the people that are behind it all. As you know, Larry, I'm invested in 2 or 3 Ethereum alternatives, and if you actually go onto their websites and look, then they do sort of investor relations, and if you look at it, then some of these things are trading for a fair chunk of change, and they aren't really ready yet. They're in air quotes development mode. So I'm expecting things to happen in a sort of a 2-year time frame. I'm not expecting it to happen next month. If you're asking me what I think the next big catalyst for things like Bitcoin will be, then I think that will be something like decentralized exchanges. So yeah, I mean, I have as you know, a longer term view of cryptocurrencies, and as you know, I have basically a few categories that I we all know that Bitcoin is a store of value, for example. And as such, I have a longer-term view on that. Yeah. So.
Okay, we have a question about. Do you have an opinion on Zcash?
Yeah, it's a. Well, when I say I have an opinion, I actually don't own any. It's a privacy coin, and yeah, it's if you're into privacy coins and you believe that, then yeah, it's one you should be holding for sure.
All right, my question is, what is a privacy coin? I'm not even sure what that is.
Well, things like Bitcoin, most people who come to it brand new, they think that it's anonymous, and it's not. And so privacy coins are literally that. They are when you go into a privacy coin, in theory, it is 100% private. Things like Monero, for example. Mm-hmm. So so these things are part of the main categories, of cryptocurrencies and tokens. So a privacy coin, obviously if you listen to the negative press, then privacy coins are bad because all sorts of bad behavior could theoretically go on with those, because they are 100% anonymous.
So money laundering and things like that could easily be done with Zcash.
Yeah.
Are they able to get their money out? I mean, I know could it be the same thing that happened with Ledger, that they could pull some kind of a...
Sure. I mean, let's give the listeners a money laundering E101 lesson for on a
none of our folks here, but go ahead. How would they do it? That's I'm interested in, not that I'm in that realm of stuff, but I'd like to know how they do it.
Well, if it goes in one end and gets put in the wash in the middle, then they can't link what comes out the other end with what came in the front end. So that's how it's done.
Wow. Okay. That's a close enough.
You want to keep it simple.
Amen to that.
And that's what's going on right now. You've got since the new year, it's abated now, but we've had the 6 weeks of complete negative press, where major chunks of Bitcoin investors have made it harder to do. China, South Korea, India, and then of course in the West we've had all the tax scares and the covering of the bases with the exchanges. The thing is, when these exchanges get decentralized and the technology's there or coming out now, the Lightning Network is one example that could be used as a decentralized engine, then that's going to make it very, very, very difficult to police. Very difficult indeed.
John, we've got a question. I don't know if we have enough time to answer. It's from our good friend over in Singapore. And his question is Ledger really safe? Now, the one that the person bought was actually a scam off of eBay, right? So if you bought one from the Ledger company, that would be more secure, correct?
Larry, that's a great question, and that's absolutely right. So my advice, anybody buying a hardware wallet, they are the safest, apart from in cold storage, which is basically a paper wallet, which aren't available for all the coins. But if you are wanting to keep your investment safe, then a hardware wallet for sure is the way to go. And absolutely 100% great question. And yes, buy it only directly from the manufacturer.
And that would be Ledger.
That would be Ledger or Trezor.
Manufacturer. Yeah.
That's
Trezor.
Right.
Hey, John, thanks for joining us, buddy. I really appreciate it. I know you're swamped today, but we'll have you on again. And may God bless, and I'll talk to you soon.
Thanks very much, Larry. Great to be on.
You
Talk
bet.
soon.
Appreciate you having you on. Bye-bye. John Jameson from the UK. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and someone's asked me a question about moving averages. As most of you know, I don't use those, but there's folks that do a good job at that. Now, I posted a chart this morning of the gold basically trading in Europe and in euros, but if you're looking at this, you'll notice that the low that we made today was spot on where it hit the 20-day exponential moving average. Now, fortunately, here at TFNN, we have 3 people that I know of. I'm not sure if David White does it or Andy, but I know that Steve Rhodes and Basil Chapman are really experts at using moving averages and how to best interpret, what's happening. So if you wanted information on that, I would suggest you listen to their shows or contact them because they really know it. I know Tom O'Brien uses them somewhat, but Basil is an expert as well as Steve Rhodes, and they do know how to use these. In fact, they actually know how to use some of the oscillators that people look at, stochastics, MACDs, Williams percent Rs, all of these things they can cover, and they use them in conjunction with other things, and that makes it pretty good to watch as we're looking at that. Now, this morning, we'll take a quick look here. The first 12 minutes of trading, we had a nice bounce in the S&P. There should be some really strong resistance up here at the 2730, folks, because that's where the breakdown occurred last night, and we're rallying back, touching that level one more time. And if we're looking at it from a Fibonacci standpoint, you'd be looking at a rally that could easily take you up on the S&P. Oh, just a minute here. That didn't work. Hold on. I've got to draw this in. Hopefully we can post it into, something's wrong with the computer. Well, I can tell you that it comes in around 2740. That's 14 handles from where we are right now. But there should be some resistance coming in there. Now, the low that we made last night down at that 2712 level, the 61% retracement came in at 2714, so that hit it pretty spot on. What we're doing now is we are rallying these 25 handles that we've done before. We did that Sunday night. If you'll notice Sunday, well, you can't notice because you're not looking at it, so let's just put it up here so you can take a quick look at it. Hopefully I'll be able to get this into the, oh boy, this is going to be tricky. Hold on, boys and girls. Oh dear, bear with me here. I think we can do it. There we go. I think that'll do it. Now, you'll notice this is what we're talking about. We came out of that triangle to the downside, stopped right at the 61% retracement, and from that level, we've had this little early morning bounce. And that's the key thing to watch here, is what this quality of this rally is, because we've seen this happen in the last 2 days. It's happened 3 different times. So that area around 2730 to 27, if it goes through that, it'll probably go to 2740, but watch it, closely. But the key is that we hit that 61% retracement on Friday into that solar eclipse and new moon, pretty much right on 27. I think it was 2748. The high was 2755. We hit it exactly on the IWM. It was just absolutely the exact number on the IWM. So that's telling us that something happened on that particular day. How big it's going to be and what's going to happen during that time, we'll have to look at. Another question someone's asking me this morning is about the news. But folks, I really don't look at the news, because I follow what the charts are telling me. That's basically the fingerprint that I'm looking for. The news basically follows the trend. Sometimes it'll change the trend when there's a change in economic thought of, something really big happening, like a war or assassination, or a change in currency, something like that, or a change in, some type of a political thing where they're going to be changing the type of backing for their currencies, something like that. That'll happen. But they can't hide from you. If people are buying, prices are going up, and if people are selling, prices are going down, and that's really what we're really trying to look at. Now, I've had a question about the Bitcoin, folks. I posted that chart of Bitcoin, and I use it in the newsletter each week, just because we really need to sort of pay a little bit of attention to this, because it's like the internet back in 1996. A lot of people didn't have any idea what it was going to be any big or not. And look what's happened to it. It's changed merchandising in the United States. So maybe this is going to be changing the way we handle currency. I don't know, but at least we're going to be following it here. Not a lot, but just little segments here and there, just to keep us informed of what's going on with these things. So watch it closely. But we've hit some major price levels this morning, folks. Starting out with the euro down there at that 123.30 level, the gold at 13.38, spot on, and also the Treasury bonds went right down to the 78% level. Now, bonds are going to be bearish for a very long time, and what we'd be looking for, and these things are so oversold, you could easily get a 3 to 5 point rally in bonds just on short covering alone. And whether that happens or not, I don't know, because the overall structure in the bonds and notes is extremely negative. And I'm emphasizing the words extreme. We've been saying that for weeks and weeks, and it's going to be, and thanks a lot, Terry. Terry's telling us that there's a big Treasury sale today, and how much is absorbed today, we'll have to find out. And one of the questions that was asked over the weekend that I just remembered was, how about China? And they're buying in Treasury bonds. Folks, China is an expert trader, and they're not going to be telling you what they're doing. So watch what the prices are doing. That they can't control, because if they're selling, prices are going down. If they're buying, prices are going up. That's really what we're looking at. Remember, we're due for a rally in these, because I think this is the 10th week down without even a bounce, so we're very close to it. So we should get a bounce in here, and like I mentioned, probably somewhere between 3 and 5 points is about all you're going to get in the bonds. And about 2 points in the notes is my guess, but we have to wait and see the structure of it, because what we like to see is the ABCD structure, to tell us that that's really what we're trying to look at. So those are the bond. They certainly look, we watch these over the months, because they've been so bearish for so darn long. Just look at the you can see the Treasury note chart here, how bearish it is, and it is a beautiful chart. I mean, this is about as perfect a chart as you can get. You can see the head and shoulders pattern, the right shoulder that came in March of last year. And look what's happened. You pull down, and there you go. we're right at really key support. You notice that 119.15, that's 1.27 expansion of the whole move from 2017. So that should be some pretty good support in the bonds. But the price objective on this big pattern, is another 4 or 5 handles lower down at that 116 level. So there's more to go. It's just a question of how much we're going to rally. The last rally we had in bonds in 2007, in notes, it went from 123 and change. It rallied 4 handles to 127. So that could happen easily here. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and someone's asked me what are the key things to watch today. Well, to me, it's the euro at this 123.25 level that we hit. We rallied about 35 pips from that level. Secondary, of course, is the gold at 1338, and watch the S&P at just 2730 level, because that's going to be very important. If we get above that, we could get all the way up to unchanged and higher on the day, up to 2740. But the way that it's acting, the fact that it broke so much overnight tells us that there's potential there for a little move to the downside. Now, what could be bigger than a little move, I don't know. Regarding the volatility index, folks, on Thursday and Friday, we had those really big days in the stock market, and the volatility index actually closed higher on both of those days. So that's telling you that somebody's taking, some type of protection. The numbers that we hit on Friday were spot on Fibonacci numbers. Check the newsletter. You'll see that every single index did exactly what it was supposed to do if we're going to act that way. And then today being lower tells you that somewhat that was, at least for a few days, the correct pattern that we're looking at. But, that could change, very, very closely. Another one, of course, the final one to look at is the Treasury bonds, watching the March Treasury bonds. The low that we had the other day was at 143.16. That was a perfect 78% retracement of the low we made a week ago. And if we get below that, then you're looking at higher interest rates coming in, which will probably be affecting the U.S. dollar also. So there are a lot of things happening, folks, and a lot of it's probably related to this lunar cycle that we had with the solar eclipse and new moon of the 15th. And this is my opinion. As we all know, opinions are like armpits. Everybody has one, and we know what happens then. So stay tuned tomorrow for Rich Anderson. He's got some great info on supply demand. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!